The average central bank worldwide holds maybe just shy of 60% of the reserves in dollars. And they know that that's going to implode. But if you revalued gold, I mean, pick a number to 10,000, 25,000, 50,000, who knows what the number is. But if you revalue gold much, much higher as the dollar implodes, then what happens to their balance sheet? The gold, the gold will blow up enough to fill the black hole created by the dollar value evaporating.
In an era of rapidly evolving financial landscapes, the impending arrival of central bank digital currencies worldwide has sparked both interest and concern among financial experts. BillHolter, a renowned financial writer and precious metals analyst, stands at the forefront of this discussion, offering insights into the potential implications of these digital currencies and advocating for alternative stores of value. CBDCs represent a significant shift in monetary policy, promising increased transaction efficiency and raising questions about privacy and financial autonomy. As Bloomberg highlighted, these currencies could offer unprecedented control to governmental authorities, posing serious questions about personal financial freedom in the digital age. This level of oversight extends beyond mere transaction tracking, with concerns about potential integration with social credit systems. As Aaron Brown put it, China's goal is not to make payments more convenient but to replace cash, so it can keep closer tabs on people than it already does. In light of these developments, Holter and other financial analysts are revisiting the appeal of traditional precious metals. Gold and silver, with their long-standing history as stores of value, offer a unique proposition in this digital landscape. Unlike CBDCs or traditional fiat currencies, precious metals are not subject to the whims of central banks or governmental policies. They cannot be turned off or devalued through excessive printing, providing financial autonomy that is increasingly rare in the modern world. The appeal of gold and silver lies in their lack of counterparty risk. Unlike many other financial assets, these metals can't be inflated or declared bankrupt, making them attractive as a hedge against economic uncertainty and potential overreach by centralized financial authorities. Reverting to paper currency doesn't solve the challenges posed by CBDCs. Proponents of sound money advocate for genuine currency competition, such as a return to gold and silver, to maintain financial sovereignty and hedge against the risks of digital or fiat-based systems. Please tune in for our exploration of BillHolter's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
If you look with this upcoming election, if you look at Kamala Harris's background, I mean, she was one of the first district attorneys that was put into place, backed by George Soros, Schwab, etc. And now she potentially could be president. Getting back to what you were talking about, Jim Sinclair originally coined the phrase "get out of the system." He ran a clearing firm, understood how it works, and back in, I think, 2004, 2005, started telling people, get out of the system. Keep low bank balances, get your stock certificates in hand, pretty much stay away from insurance products, and put your hard-earned savings in gold and silver, not at a bank, not within the banking system. Either hold it yourself or do it through a private non-bank vault, because gold and silver are the only monies, as you mentioned, have no counterparty risk. And really what that means is they can't be inflated, they can't be printed, and they cannot go bankrupt. You cannot wake up tomorrow morning and find out, the company created some product that kills people and now the stock's worth zero. Gold and silver have been money for 5,000 years. They cannot bankrupt. If you get it out of the system, you're out of the system. And we're absolutely headed for central bank digital currencies all over the world. And just for the two of us doing this conversation, we would have our accounts shut off by this afternoon. Just understand that owning gold and silver creates liberty for you. It creates options, creates choices. It's wealth that cannot be denied to you. That actually happened here in the United States back in, 1933, 1934, when they had the bank closures. People went to their safe deposit boxes and they were emptied. I mean, if you had gold in your safe deposit box, it was gone. If you put gold in a safety deposit box now, you got to be out of your mind because it's going to be taken. It's fairly easy to store a large amount of dollars or euros or whatever in gold. I mean, a 400-ounce bar now is $1 million.
Millions.
I mean,
Yep.
go back 20 years ago, and you were looking at $100,000. So now it's $1 million. And I mean, to store 2,000, 5,000 ounces on your property, that's certainly doable. Now, silver's a different story, but yeah, you can hide gold. You can dig holes on your property, gold in your basement, put it in a potted plant, whatever. You can hide that because now you're talking about a large currency amount per ounce. And while we're talking about this, I noticed that James Turk was just talking about his gold overvalued. Gold is so undervalued, it's not even funny. People are thinking, oh my gosh, gold's $2,500 an ounce. It's too high. I'm not going to buy it. Well, the only question in my mind is how many zeros get put on the end of that 2,500 before this is all done.
In an era of global economic volatility, central banks increasingly turn to a time-tested store of value, gold. Financial expert BillHolter highlighted this trend, underscoring a growing concern about the stability of traditional reserve currencies, particularly the US dollar. The first half of 2024 has seen a remarkable surge in central bank demand for gold, with Poland, India, and Turkey emerging as the most voracious buyers. Their purchases significantly outpaced sales, reflecting a strategic shift in reserve management. Uzbekistan also joined the gold rush, with net purchases exceeding 7 tons, further emphasizing the metal's growing appeal among national financial institutions. This recent uptick is not an isolated phenomenon, but a continuation of a trend that began in earnest in 2022. That year marked a record high in central bank gold demand, a level that remained robust throughout 2023. The persistence of this trend signals a deep-seated concern about the future of fiat currencies and the global economic landscape. Let's get back to the interview.
I would just say if central banks all over the world have been actively hoarding gold, there's a reason for that. And all you have to do is look at what their holdings are. And the average central bank worldwide holds maybe just shy of 60% of the reserves in dollars. And they know that that's going to implode. But if you revalued gold, pick a number to 10,000, 25,000, 50,000, who knows what the number is. But if you revalue gold much, much higher as the dollar implodes, then what happens to their balance sheet? The gold will blow up enough to fill the black hole created by the dollar value evaporating. So really, what they're doing is they're front running what they know is going to happen. If anybody gives you a firm number as to where gold's going, they're full of crap. They're making it up.
Yeah.
You mentioned sanctions and you also mentioned derivatives. First off, let's go back to October last year. The United States said we are going to confiscate 300 billion of Russia's treasuries. That was the low in gold. That was roughly $1,700 an ounce. Now we're just north of 2,500. That is almost a 50% move in the value of gold in less than a year. That's completely unheard of. And that's simply because nations worldwide have said or have thought to themselves and acted by buying gold because they're thinking, well, if they could do this to Russia, the most powerful military on the planet, they could do that to us without a problem, without even batting an eye. So that's the reason gold has rallied so strongly from October. You also mentioned derivatives. And I guess with this part, I'm going to ask you a question because I don't really know the answer. 2-3 weeks ago, you saw the Japanese market based on a 0.15% raise in interest rates, the first raise in 20 years or whatever. That market imploded 25% in 3 days. And I looked at that and I said, well, this has got to be it because there's got to be margin calls all over the world in all kinds of markets, even if you say that the yen carry trade is 20 trillion, which is what the official number is, that's on books. That doesn't include OTC derivatives, which could be 10 times that.
Mm.
And almost immediately, probably 3 or 4 days after that happened, people are running around saying, oh, well, the carry trade, they've cleaned up 75% of it. That has to be complete. It took over 20, almost 30 years to put that carry trade in place. And you're telling me that in a 3-day period of time, 75% of it was erased and no one died? There was not one death, not one financial death. Something really stinks. I mean, we found out in 2010 that the Federal Reserve had lent 17 trillion all over the world to save the system. We didn't know it at the time, but we found out after the fact. How much money do you think central banks all over the world put up to keep this thing from imploding and shove it under the rug?
The growing interest in gold among central banks and the looming advent of central bank digital currencies signal a significant transition in the global financial system. This shift highlights the enduring value of precious metals and underscores deep-seated anxiety about the future of traditional fiat currencies. As nations continue to bolster their gold reserves and explore digital alternatives, we stand at a monetary policy and financial sovereignty crossroads. What long-term implications does central banks' massive accumulation of gold have for the global economic order? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.